Apple coming in with a big beat. Earnings growing 40% year over year. Guidance was strong with revenue projections of over $60 billion next quarter. Guy Adami.
Yes, sir.
Your reaction and whether or not this is a must-own stock.
Well, let me preface this by saying I'm not going to be disingenuous and say I've been some raging Apple bull. I haven't. I've been bullish over time, bearish over time. But the reality is here we are at all-time highs. So I put that out there. To answer your question, given this quarter, yes, Tim and I were just playing with our calculators here. And service revenue now overall is 18% of their revenue. That's, that continues to trend in the right way, which means, in my opinion, that Apple should get a higher valuation. I think that's what everybody wants. What I was most surprised by, and Dan can probably explain this, is why the average selling price for the iPhones were almost $40 more than the street was looking for. That's significant, and they sold more phones than the street was looking for. So I think overall, you got to think this is a pretty outstanding quarter.
They sold more phones, and they sold more higher-priced phones than the iPhone 10, obviously the most high-priced phone. Tim Seymour filling in some of that profit gap here. Your reaction to the quarter, obviously the market in extended hours, and we are waiting on the conference call, but right now they like the numbers.
Well, the quarter was fresh and it was exciting and it was so inviting to me, Brian. So, the bottom line here is I think if you look at services revenue, that was up 31.3. Guy gave you the quarter over quarter for the year numbers. Also, if you think about international, it's now 60% of sales. China grew 19%. There's nothing about this quarter right now that's difficult for the market. Everyone wants to blow a hole in this company. The 10, too many SKUs. Bottom line is we have another product release coming out in the fall. And this is a company that's been very defensive during a difficult time in the market. Good for these guys. Capital return is a big part of that. It's a very defensive story. You stay long.
Yeah, Karen, are you an owner of Apple?
I am not. I'm sadly not an owner. I agree with both of what they said. The question is, what is the multiple when the revenue mix is changing the way it is to a more favorable spread for more favorable services, which I don't know what multiple it deserves, probably something significantly higher than where the stock is. I also don't know what is the multiple in the hardware business. That's, I think, a trickier part. But on a quarter where really expectations were not that high that this was going to be an important quarter, they had an outstanding quarter. And so I hope that this translates to a wider tech rally, even though they're completely different businesses from the other FANG names. I hope that's going to happen tomorrow, and I think it probably will.
The multiple in the services is kind of interesting, making up almost 18% of the total sales. I know Gene's going to probably speak to it. Last few quarters, you've been suggesting that I'm not really going to kind of be placing a higher multiple on those services until it's maybe about 25% of their total sales. But the fact that it was up 31% year over year, and that is basically flat sequentially, is pretty impressive. I think a lot of people were expecting that to be lower. And I just want to, the thing about margins is kind of interesting. If they're doing increasingly more services, which we believe to be higher margin, there may be some issues with the hardware. And we also know that as they refresh the iPhone 10 in September, there's talk that they're going to have a lower price point on that 10. They're also going to add, as you said, a phablet, a 6.1-inch OLED sort of thing. So, the ASP, the average selling prices, is pretty interesting. They're maintaining, prices on the high end because they keep doing these higher end phones. Who knows? Just one last point about why that ASP might have been so high. China up 19% year over year. We know that the Chinese like that higher end phone. And Tim Cook has routinely said since the iPhone 10 was launched last November that this has been the best seller on any category.
Yeah, and I think that, listen, services is so key, Guy Adami. We don't talk a lot about it, but we need to talk more about it. $9.5 billion. We are headed toward a $40 billion a year business for Apple, probably next quarter. That is iTunes. That is some of the iCloud, the cloud computing.
What's the installed base, Dan?
It's over $1 billion.
Okay, so think about you're getting scale on something, even in the early innings, that's of scale on an installed base of 1 million phones. So a billion phones, excuse me. And I think this is really, really important when you consider that we don't necessarily need the watch and some of these other ancillaries. We don't need Apple Home. We don't need all these things that ultimately could be part of it. And obviously that's a services revenue. But to me, the story with Apple is still very important. Capital return. Think about what these guys are going to do every quarter for the next 3 years, possibly 5 years. It's going to be massive.
I just want to add one point. You said you don't need the watch. If you look at the other products category at $4.7 billion in the quarter, that's greater or equal to iPad. So when you think about this is a category, it's really watch and AirPods. Forget the home. That's like a beta for all intents and purposes. So, you have other, which is these wearables, and then you have services, which are greater than Mac and iPad combined.
Let's put it into perspective here, too, Guy, because, services is Apple's second business. Obviously, iPhone is the big one at $29 billion in revenue in the quarter. Services at $9.5 billion. Facebook does $13 billion in annual revenue. Apple, in other words, does as much revenue in 4 months, effectively, as Facebook does from its primary business in a year. So this is a beast that is growing for Apple.
So the question then is, why doesn't Apple get a similar or a valuation in the ballpark of a Facebook, for example? I think that's where you're going then. I think one of the Apple bulls have been, why haven't we been able to get the valuation that this company deserves, on top of the capital return that Tim's talking about? And I think now, as this thing trends towards 25%, and I can't tell you when it's going to get there, but at this trajectory, it probably gets there, I would imagine, sometime early 2020-ish. Then you start to get a valuation that would make sense for everybody, I would think. I mean, Karen can opine on that.
I mean, is they're heading toward this razor model by having the hardware, software. That is a giant multiple. I wish I owned it now. I hate buying things that are up. So I probably won't do anything in the aftermarket or tomorrow even, but I think it's better here at this price with these earnings than it was this morning coming in.
One thing I just want to mention, they bought back $20 billion worth of stock in this quarter,
right.
And that was on top of the $23 billion they bought the prior quarter.
It's going to be $25 billion for the next 3 years.
I'm just saying, but it's a massive acceleration. They started this capital return program in 2012. I think they've got to about $300 billion total. That's including dividends. At least $200 billion of that have been stock. But they've been accelerating it over the last 6 months in just open market participation. So they obviously think the stock is really cheap.
Yeah, and the third business, if you will, and we'll take out the iPad, is what they call other. That is Apple Watch. It is Apple TV. It is the HomePod. The Apple Watch has been, I think, much derided. I think it's fair to say it has not gotten much attention at all.
Dan, you have like 15, don't you?
There you go. That industry was the fastest growing year-over-year revenue business for Apple. The other segment grew 37% year-over-year. Again, AirPods, Apple TV, Apple Watch, Beats, HomePod, iPod Touch, and other third-party accessories. So Apple's really firing on all cylinders, Guy, on a number of different fronts.
Did they break out AirPods?
No, they don't.
No, it's in that other products with the watch. And AirPods are new, so of course that's going to come from almost a zero base. But you wonder, is the watch outperforming now? Is Apple TV starting to become a TV substitute?
I don't know about Apple TV, but I think when Dan said beta, I mean, I think those numbers give you some optionality. I don't think that's what people are basing their Apple investment upon. But if you get some performance there, it just gives you sort of the beta that Dan just mentioned before. The core of this thing still comes down to services and the phone, and they're crushing it. I mean, Gene can speak to the other, but to me, it's all about what's the right valuation on the $13.25 they're going to earn next year.
I would also argue that this is not supposed to be a great quarter for them. You know, I mean, if you also think about now we have possibly the tailwind of a product release. This is the time this stock usually outperforms, not this quarter. And to be clear, I think the stock really outperformed this quarter. And we talk about it relative to the triple Qs, of which it's almost 12% of that entire index. But Apple has been outperforming, whether it's a 6-month basis, a 2-year basis, or a 5-year basis, to the Qs. So at a time when people are looking at tech and looking at the high growth, this has been the most consistent company. The iPhone is arguably becoming a more predictable story. The services is basically not only diversifying the revenue stream, but it's starting to flatten out some of the volatility in the name. Very bullish.